So let's get to the basics, if you will,
Yeah. Thanks for having me.
stocks. Yeah. Let's start with the most basic question.
Okay.
What is the stock market?
All right. Whenever people ask me what the stock market is, we go back to the very basics that at the end of the day, the stock market is all about businesses. Businesses that people go into the stock market to raise money. So if I'm a business, say, I'm a grocery, I'm a supermarket, I'm a mall, I'm a property developer, that I'd like to raise money, but I don't want to take out a loan. I don't want to issue bonds anymore, but I want to raise it the other way. I go to the stock market. And what's unique about going to the stock market is this. If you put your money there, you're not obliged to pay them on a regular basis, unlike going into a loan or going into debt. So it becomes a tool for companies to expand. And at the same way, it becomes a tool for us as investors to take part and become part owners of the largest companies in the Philippines. So if it's not in the stock market, you normally see big corporations like the Ayalas, the SMs, that you won't be able to actually invest and be a part owner of those companies if it's not listed in the stock market. You won't see their CEOs knock at your door.
Right.
They won't say,
Edric, would you help me?
Yeah, I need 10,000, I need 100,000, I need a million. They won't do that. That's why the stock market makes it centralized, where it becomes available for every Filipino that wants to actually invest in it.
Right. I'd like to ask, of course, why isn't every company listed in the stock exchange? But that's a separate topic.
All right.
I'll go to the. All right. So very clear, Marvin. I like the idea of the partnership with these companies. What would you say are the common myths, therefore, when it comes to the stock market?
Okay, that's a really good question.
I'm sure it's one of your favorites.
Yeah. Because through the years, I've seen a lot of people not invest, not because they didn't have the money, or at a certain point in their life they just didn't know what it was. One of the biggest reasons why they don't invest is because they're scared or lack of knowledge. Because when they know what it is, it gives them the conviction, it gives them the confidence to actually put their money into. And for years, you haven't seen it. It's something that was never taught by our parents.
Correct, and it's not something you teach in school,
yeah,
right?
So you can't blame your parents at the same way, because they can only teach you what they also know. They can only give what they have. So I really want to see a new generation of Filipinos actually start investing. And one of the things that have prevented them from investing is that they just don't know. They think it's expensive. They think it's gambling. They think I need to watch it every day. Those details, those misconceptions that have shrouded people from actually taking part in investing in the market.
Okay, I like that. So you did actually call out some specific myths, like people think it's gambling. You said that people think that you have to watch it every day, right? What other myths prevail? No? So clearly we need information, but what would you say are the common misconceptions?
Those are the top two. Another one is they think they need millions or multi-millions of pesos just to be able to invest in the stock market.
Pangmayaman lang yan.
Pangmayaman, pang-edukado. Yun, they also think you need to be an analyst or to be an accountant or someone inclined in the financial sector to be able to invest in the market.
Right. Let's bust this myth a little bit.
All right,
or some of
good.
it. How can a person actually make money from stocks? So it's not just for the rich. It's not gambling per se.
All right.
What are the mechanisms involved?
Okay, let me break it down further. When people say that it's gambling, when you say gambling, you put in your money without having a chance, a 50-50 chance, sometimes even lesser, to actually make money. But if you invest in the stock market, you're actually putting your money in companies that you know will still be there 10 years from now, 15 years from now, 20 years from now. I look at it this way. If I have a friend who comes to me, Marvin, let's start a business together. Let's start a fast food. Let's start a restaurant. Let's go into the food industry. He may be good in cooking, he may be good in doing stuff related to that industry, but it's the first time he's doing it. I'd rather buy shares in a company that I know is there. Because the difference with that is you're buying something that's already established. You're buying something that you know is already growing. Chances are over 5 or 10 years, the listed company that's already there will still be there, and not just be there, they're growing. If you put it into a friend who's just starting, that becomes a bit risky.
Clear.
So when you know where you're putting your money into, you know it's a rock solid business, why should you be scared? Why should it be gambling? It becomes gambling if you don't know what's going to be the end result.
Sense, Marvin. So I think the key there is to make sure that, because, help clarify this, maybe this is a myth, no? But does this mean that every single company that is listed in the stock exchange is a good company to invest in?
There are certain companies that outperform other companies, and there are some companies also that, because they're businesses, there are certain cycles where they're not earning as much as other companies. So our job as investors, I always say this, the stock market is not as hard as what people think, but also it's also not as easy. There's an amount of effort that you need to do due diligence to study. The more you study, the more you prepare, the better decisions that you'll make.
Let's get to some details of how you actually make the money there.
All right,
so a person buys. You want to help mention the dynamic?
Yeah, there's two ways to earn in the stock market, two primary ways. Number one is you earn through capital appreciation, meaning when you buy a stock, it goes up over time. When you sell it, you make money. One of the biggest misconceptions is that if you buy a stock and it goes down, you lose money right away. Not yet. And I know you tackled this on the show several times.
Say it anyways, yeah.
That's just a paper loss. You make money also in the market if you actually sell and actualize that gains. So that's where your strategy will come in. I've mentioned in my book several companies that 10 years ago, they were really not worth anything. And then you fast forward 10 years from now, some companies were just centavos. Fast forward 10 years, they're 60, 50 pesos. If you placed around 24,000 pesos, it would have been 10 million.
Hindsight is always 20/20,
yep.
when you look back.
But here's the thing. Those companies will run even though you don't watch it every day. A rock-solid company that's expanding will still, for example, ABS-CBN. I may not watch ABS-CBN stock every day, but I know that everything's going to run well. And that's something you can be assured of if you invest in the stock market. ABS-CBN will be profitable regardless.
Of course.
So
I have to say that, yeah. You said there's two ways, capital appreciation. The other way?
Dividends. Dividends, on the other hand, capital appreciation has a lot to do with the market altogether, meaning if the sentiment is good, people want to buy, stock prices goes up, more buyers bring the prices up, more sellers bring the prices down. Dividends, on the other hand, is totally different from capital appreciation. It has nothing to do with sentiment. It has nothing to do with the market forces altogether, but it has everything to do with how profitable the business is.
Sure.
The more profitable the business is, the bigger the chance the board of directors can actually give out more cash to reward their investors.
Wonderful.
So the thing that they should look at when they're looking at dividends as a way to earn is companies that are maturing. Meaning, if they're maturing, there's not much room for them to actually expand or grow. So rather, if they don't know where to put it, chances are they give it back to their investors. So that's one way for them to earn. And the good thing about that is, if they place their money, they put their money for dividends, the market can go up and down all at once, but you're going to receive your dividends as long as that company has a good dividend payout ratio.
So watch out for that as well. No?
Yeah.
Do they have a good payout ratio? All right, so Marvin, a person hears this and says, Marvin, I'm sold. How do I start?
Okay, aside from actually studying, the best place for you first, above all, I tell people this, if you study initially and you build a good foundation, buying stocks will be easy. Because some people, they just want to study this, and then they buy their stocks and monitor it every day because there's fear. They don't know what's going to happen.
Correct.
But if you spend a large amount of time building the right foundation, building the proper foundation on how to do things, what's going to happen to you? Buying just becomes something that you execute.
Right.
Once you execute something out of something you already know, it becomes easier. So once you build your knowledge, pick a broker. Your broker is your gateway. At the end of the day, a broker is your tool for you to be able to go in and out of the market. You cannot buy and sell stocks in the stock market without a broker. You pick something that fits the qualifications that you're looking for a broker. If you go to pse.com.ph, you'll see the list of brokers that are there, online and traditional brokers also. I also have some in my book that are listed there.
Okay, and I like how you said that it's important for you to study,
Yeah.
right? And we're looking at even newbie investors, right? They have to study. What things do they need to study, Marvin, to make sure that buying becomes executory, as you mentioned earlier?
When they start studying, the first things they need to do is they need to define. This is now the financial planner part of me first. They need to cover all their bases, and we talked about this in the show several times. Their emergency fund is there, that they're not investing things that they need on a daily basis. They're putting money that's an excess for them. So when they know that the money that they're putting is something that they won't need, it gives them the confidence already. So if you're a newbie that wants to start with that. Start with something that's an excess. But even though if it's an excess, start with something that you can tolerate. Because a lot of people that invest in the stock market have the intelligence, learned a lot in it. They know a lot here, but sometimes they don't have the stomach to go through the volatility. So if you start with a very small amount, you start with an amount that's tolerable for you, the volatility that may happen on a day in and day out basis may not affect you that much. So what's tolerable to you, what's a high or low volatility for you, is already subjective depending on what type of person you are.
So would you say, all right, newbie investor, yeah, try out the stock market, you know, what you can tolerate. Would you suggest they're going to small or big companies?
Okay, go with something. Biggest tip that I can give them, be an investor first. If they start being an investor, pick companies that they know that will be there. Meaning those are again big companies, because if they attach their investments to something that they know will be there 10, 15, 20 years from now, things that they see on a daily basis, it will be hard for those companies to close down. Also, than the smaller companies that are there. When you compare big and small companies in a recession, the smaller company may have a harder time than the bigger company. Chances are also that the smaller company would close first than the bigger one.
Here's the money question. How much should a person have when they start investing in stocks?
There's what they call a board lot. The board lot is the minimum number of shares that you can purchase as an investor. What does that mean? So for example, if I buy ABS-CBN stock, ABS-CBN today is 32.50. The board lot for ABS, I think, is 100. So 100 times 32, it's only 3,250 pesos. Some stocks are 80 pesos. The board lot for that is 10. 80 times 10, it's only 800 pesos. Look at it this way. For 800 pesos, you get to be a shareholder. Once they find that, hey, this is something that's good for me, that's when they start putting larger amounts. You can do peso cost averaging, which is okay for people who have are employees that get normal incomes on a monthly basis. It would be a good approach for them. But if you have a lump sum already, the best place for you to become a buy and hold investor is in areas where you see the market go low. When the market goes low and crashes, by all means, put a lot. Because if you put a lot when it's very low, your upside will be bigger.
How will you know when it's low?
How will you know when there's low? When there's panic, when everyone's fearful, when you see a lot of foreign investors take their money out, when you see a lot of good stocks probably decline more than 20%, even more than that. When you saw the 2008 recession, one of the biggest fast food chains dropped 30%. That's one of the biggest fast food chains. When it dropped 30%, you look at the company, it's actually earning. They were actually earning that year. So when you see that,
buy.
It's a buy. When everyone else is panicking, and you see there's nothing wrong with the company, it's a buying opportunity for you.
Okay.